Welcome to the Daily Update, where I'll go over the action in the market for Monday, November 6th, and then we'll see how things look for Tuesday, November 7th. We had a real comatose day. The market just chopped sideways. The mega caps were able to hang in there, and that's what kept the S&P positive. But the rest of the market experienced a bit of a pullback. We saw some weakness in the advanced decline line, and under the surface, there was some selling. But still, we're holding up. However, we're still below that longer-term resistance that I'll go through. We've also generated another buy signal. Now, this was actually generated over the weekend, but because of the way this is calculated, there's a one-day lag. So I didn't really get to see that until I was preparing the video for Tuesday. But I have a chart to show you there, and it's a very rare signal, and we've seen it twice within the same year, which is even more rare. Let's go back and talk about what happened. But before that, please note that there are times when I have trouble uploading to Rumble. I was having some trouble last week over a couple of days. Then it seemed to get better. I never know when this is going to come back up. So if you can't find the videos on YouTube, please switch over and look at Rumble. If you can't find them on Rumble, please switch over and look on YouTube. I try to stay on top of that the best I can, but I never know when something's going to be more difficult to upload. All right, let's go back and talk about what happened. Right at the open, we did have a higher open, but it was just flatlined. Prices moved sideways right after the open. There was really no gyration. As the day went on, we declined a little bit. We got below the unchanged level and also below the daily pivot at 43.55. Then we drifted back above the unchanged level and above the daily pivot, and we closed just a little bit higher for the session. We were up 0.18%. And one thing that's interesting, for the first time in a while, we're actually below average with volume. There were no economic reports that came out. There was a lot of relief every time now that a weekend passes and something big doesn't happen that really impacts the market. So folks are just kind of stepping back and saying, okay, until we get some more direction about what's happening, we're going to lay out for right now. Our technicals are still positive. We're still working on that extreme positive condition in the short term. Maybe that's getting worked off a little bit. We had a few indicators fall off the list, also intermediate term, but at the same time, there are other indicators that are showing some improvement, and our long-term indicators are also improving. It's about inflation, interest rates, growth concerns, and of course, geopolitically, what's happening specifically in Israel. Some comments. The mega caps did hold up better than the rest of the market in Monday's session. Oil closed up at 81.10, didn't seem to have much of an impact. On a short-term basis, we have the Stochh RSI, Women's Percent R, CCI 14, Stochastics, the Force Index, and the rate of change going back 5 periods. These were all on the list for a Monday session, so none of that has really changed. There was one that dropped off in our intermediate term condition, but we still have the CMB composite, the PMO studies, and the NYSE McClellan oscillator has dropped off the list, but we still have the S&P 500 McClellan oscillator that's looking extreme positive. And we're still going through this scenario. It's shifting just a little bit. Instead of the economy being feared that it's stronger than expected, it looks like the economy is not stronger than expected, and that the Fed may not even need to raise rates going forward from here. Now, that can always change. There is no talk of cutting rates, but at least there's some mingling around based on what Jerome Powell said last week, that possibly that the Fed is done raising rates. We're waiting on some big economic data coming out of China that may have an impact on the market. Of course, everything that's going on in Israel, what's happening with oil, and then earnings as they are being released. The dollar was up and interest rates were up, and now both of these together usually provide headwinds for stocks, but they, at least for the S&P, didn't have that big of an impact. The 10 to the 2 and the 10 to the 3 month, they're still inverted. That has not changed, even though they're showing some improvement. Sentiment is still negative. We ticked down just a little bit. We closed at 42. After Friday's session, after Monday's session, we closed at 41. Our trend is still positive. The green line's on top, but it's a weakening trend with the ADX going below its moving average, but it's still above 20. So we're still in a trending environment. I'm keeping our bias at positive with the slight update, and our momentum has been positive over the last number of days. Last week, what ended up being the strongest week of the year. And it's kind of encouraging that after we did see such a big upward move, that Monday's session didn't see a lot of profit taking, at least in the S&P. We just chopped sideways. Now, the rest of the market did go in and take some profits, but at least for the index that we follow, it just pretty much moved sideways. Excuse me. Economic reports, we didn't have any in Monday's session. We did go up a little bit with interest rates. We're at 4.66% with the 10-year yield. That's above the 4.02%. That's kind of the line in the sand, according to RenMac, that this is when it starts to cause problems with company earnings. Here's our intraday chart where we just flatlined right out of the gate. We were up from Friday's close, but we just went along this line. We drifted a little bit lower below the unchanged level, below the daily pivot, and then we came back up and we closed. Well, you could say that's at the high, but my goodness, this was just a flatline day. We're still seeing on the intraday basis where value is outperforming growth. The red line's above the blue line. That's somewhat of a warning sign. But this is a little bit better when you just look at the S&P growth to value ratio, where growth did outperform in Monday's session. So that's good. This has been something that I've been concerned about. When we were going lower, we saw this line going down. And then last week, we didn't really see much of an improvement with this line. You would think when the market really kicks into gear and goes higher that this would really shoot up. That's not what happened. And in fact, in Friday's session, we ended up being down. Well, we saw a bit of an improvement in Monday's session. Looking at the growth to value ratio, it ticked up, but still, we want to see this turn and go back up to turn things back more positive. Looking at the condition of our trend, the green line's on top, even though it declined. The red line's on bottom. We are below the moving average, so this is a weakening trend, but it's still a trend because we're above 20. And then looking short term, kind of seeing that same thing. Below the moving average, green line on top, but coming down, red line also declining. Keeping an eye on the VIX, we're still wondering if we're coming into that sweet spot in November where the VIX really starts to go down. That would be more positive for stocks. The Ulster Index is starting to turn back down after getting a pretty high reading. Looking at the VIX, where we're pretty much unchanged with the line chart as well as the bar chart. The VIX of the VIX, it ticked up just a little bit as far as volatility with the bar chart as well as the line chart. The VIX to VVIX ratio is still going up. That's longer term negative. The VIX to the 3-month average of the VIX is still continuing to go up with the moving average, even though it has been declining. If we still see the VIX continue to fall, eventually this red line should roll over and look more pronounced to the downside. The VIX to move ratio continues to decline as well. And the equity put call ratio, this is a bit of a concern. We actually ticked up just a little bit. Now, in the bigger picture, the bigger shorter term picture, we're still declining, but we did see this tick up just a little bit in Monday's session. The longer term equity put call ratio is also continuing to go up, but you can see it's flattening out now. If this can turn and start to go back down, that would be longer term positive. This other fear gauge just ticked up a little bit after it had really declined. The other fear gauge also continues to decline, but this is another bit of a concern. We were down with the risk on, risk off ratio, and it's in a longer term downtrend. It bounced back up a little bit last week, but now it's starting to go back down. That's a warning sign. Looking at our advanced decline line, we did decline based on price and volume, but we're still above the moving average based on price. We're below the moving average based on volume. We did see more new highs than new lows, so now our 5 period is going up and our 10 period is going up, but we're not really seeing a breakout with the new highs here. The advanced decline ratio ticked down just a little bit, both the blue line and the red line, but they're both above 0. This is positive. Accumulation distribution is now well above the moving average, and it's starting to turn the red line, which is the moving average, back up. The chicken money flow, this is a bit of a warning sign. We're still starting to see this drop off a bit. This is another smart money indicator, and the red line is now starting to turn down, even though it is still positive. Here's our daily chart. We're still at the underside of this trend line. It's a little more pronounced in a chart that I'll show you later. On the bottom, we can see where volume really dropped to below average, and we're coming down a bit. We're still above average with volume, but with the below average day on Monday, this is starting to roll over. The force index is still extreme positive. We're outside of the upper Keltner band because it really shot up. Even though it declined just a little bit, it's still well above the blue line there. The Stochc RSI is still extreme positive. The Williams percent R is extreme positive. The CCI 14 is extreme positive, not the CCI 20. It's not there yet. Our stochastics, we're extreme in the short term, we're extreme in the intermediate term, and we're turning more positive in the long term as we crossed above the midpoint. The rate of change going back 5 periods, it did come down a little bit, but we're still above this blue line, which often marks an extreme positive reading. The standard deviation starting to go back up now. And again, this is not measuring direction. This is measuring speed of price. And we go back 10 periods to do this. And so we're going to continue to get kind of a high reading as we really shot up last week. The Erin is really not doing much of anything right now. I thought about not including it, but about the time I do that, it really shifts into gear and tells us something. Looking at the cumulative NYSE advanced decline line, we did come back down after coming up to the moving average. That's a little bit of a warning sign, broader term. The regular advanced decline line didn't quite get up to this trend line that I drew in here before starting to turn back down slightly. We're still below the moving averages with our regular NYSE advanced decline line and reaching a death cross just a few days ago. Even though this has been showing some improvement, it declined a bit on Monday. The Swenlin trading oscillator didn't really move all that much. We're just barely extreme positive based on price. We were pretty much flat based on volume. And this, I had an erroneous chart in here when I did the video for Monday. This is an updated chart now showing how the advanced decline lines are showing some improvement. We came just about up to the moving average before turning back down with the NYSE. We're coming down a little bit below the moving average with the S&P. We came up to the moving average and declined with the mid caps. We didn't make it up to the moving average with the small caps before declining in Monday's session. The go, no-go system is producing a go now. This is more of a brown bar followed by a blue bar, and that's looking a little bit more positive. The TTM squeeze continues to show some improvement, even though it's still below zero. The balance of power declined from the midpoint. The highest high, lowest low values were above the midpoint, and the midpoint is now starting to turn back up. That's a positive sign. We're still above this line with the 200-day simple moving average, and that was a major area that we recaptured last week. The CMB composite is still extreme positive with its reading. We're just a little bit above the 50-period moving average. That's the red line here, and that's a pretty significant moving average that a lot of folks use. The longer we can stay above this, the more these lines are going to turn back up, and eventually we want to see the blue line cross above the red line. The 100-period moving average, we're still stuck in between the exponential and simple moving averages, but so far this is holding up. Looking at our moving average tree, we're starting to come back up. As we get above these shorter-term moving averages, they do start to turn and go back higher. Ichimoku cloud, we're just coming right into the underside of this red cloud that could produce some overhead resistance. The vortex is still negative with the red line on top. It had been really coming down, but we turned back up slightly in Monday's session. The ease of movement is still below zero and flatlining right now, but showing some improvement. This is where we're getting a lot of improvement from, is the bullish percent index, where we came back above 30 and we're continuing to go higher. It would turn even more positive if we could get above the 50 level. And the S&P McClellan oscillator, after getting extreme positive, it's still extreme positive, but it's starting to come down. And our summation index based on price is advancing as well as volume. It would be more positive if we could get back up to the zero line and then keep going. And the NYSE McClellan oscillator, it had been extreme positive. Now it's coming back down slightly, but we're still positive. So we're headed higher with the summation index based on price and volume for the NYSE. We're positive with the Elder's Impulse system for the S&P, and the RSI still continuing to look better based on 14 and 9 periods. Unbalanced volume is crossed back above the moving average. The longer it can stay above this, the more the red line will turn up. And we came down just a little bit with our 200-period moving average study as well as our 50-period moving average study, but these both have been showing a lot of improvement. We're still just a little bit above this 100% retracement level on our short-term fib chart. If we break up out of this, I'll probably stop using this chart, but since we're not very far away from it, I want to keep a close eye on this. Longer term, we're above the 61.8% retracement level, and kind of the same thing. Do you see all these prices where we were chopping sideways back in October? we need to really break out above this for things to turn more positive, or is this going to end up providing some kind of resistance? Looking at our PMO studies, we're extreme positive, but rolling over a bit with the PMOs that are rising. We're positive with the buy signals, and we're turning more positive with the PMOs above zero. Momentum shows that the PMO is going higher, as well as based on price and volume. The NYSE bullish percent index is showing improvement. It would be even more positive if it could eventually get above 50. The NASDAQ 100 bullish percent index just pretty much was flat, but it has crossed above 50. These are the really big stocks, and they've been leading the market in 2023. So this is more positive. On a short-term basis, the slope oscillator is turning back up after going extreme negative. The MACD is looking more positive, but still below zero. So when we look at all of our momentum oscillators, we're positive in the short term, turning positive in the intermediate term. We're starting to cross over positive now in the long term. When we're not necessarily extreme, when we look at our standard deviations chart, we were sideways in the day's action, so we're still in the +2 standard deviation. It's when we close in the +3 or -3, that's when it looks like we've gone too far too fast. The Chaikin oscillators above zero and advancing, that's positive. The money flow is still camped out just a little bit above 50, so that's slightly positive. The ultimate oscillators above 50 and advancing, that is positive. The Kopit curve is now switching back over and looking positive. The parabolic SAR still remains positive, and that's, to me, a pretty big signal. But we're still underneath this long-term trend line. This goes from the October 2022 low, which you don't see on here, and it connects the March 2023 low, and then this line was just extended. We fell down below this, and now we're starting to come back up. We're wondering, is this going to be resistance, or are we going to be able to break through this? If we do break through it, then we'll probably have to extend this trend line down to see if that ends up providing resistance. Looking at Dow theory, we were up slightly with the Dow. We were pretty much flat with the transports. We actually declined with the utilities. And the transports still are continuing to underperform the Dow, even though they've been improving. But we're not really seeing a lot of improvement with our transports to S&P 500 ratio. It's ticking back up a little bit, even though it declined on Monday. We want to see this really going up to turn more positive. And the Dow continues to outperform the transports, even though this has been declining lately. Longer term, the Dow continues to outperform. The Zohorchak still hasn't changed back to a full-blown buy signal yet. And then looking at the Staples to S&P 500 ratio, this is declining, and that could be positive for stocks. When this goes down, that often gives really good support to the S&P. Then the opposite of that, when the S&P is outperforming utilities, which it has been doing, that is often positive, but we ticked up just a little bit in Monday's session. Longer term, the highs minus the lows for the S&P, and then taking a 10-day moving average, we're coming up to this 25 area now after getting extreme positive. We almost made it back up to 50, and now we've been declining just a little bit. We got extreme negative again, so we're kind of in between looking better or not looking as strong. Looking at the advanced decline ratio based on 19 periods, we're above zero based on price and volume. This is longer term positive. We're down with the micro caps, but we're still not setting a new 52-week low, but we haven't been able to get back above the 100 level. The Heiken Ashi continues to be positive. The Kegi chart is positive. The Renko chart is positive. And the three-line break is positive. The equal weight index ticked down just a little bit and continues to underperform the weighted S&P 500. And our ratio still hanging in there fairly good. And as I always say, there's two ways to look at this. With this really going up, that just means that there's a few stocks that are outperforming. But at the same time, if this starts to come down just a little bit, that could mean more broad market participation. The Dow still above its 50 and 200-day moving average. If we can stay above this, we might avoid seeing a death cross. And the diamonds still remain positive for the Elder's Impulse system. We're still coming into longer-term resistance with the NASDAQ 100. We want to get back above this R1 level. That's first. And then we want to get back to this previous all-time high. And I drew this chart on here months ago before any of this stuff over on the right side even happened. I just kept this on here since then. We want to really break above this if we're going to turn more positive. If we hit resistance and start to come down, that could be more negative. We're still positive with the QQQs, with the Elder's Impulse system. And our momentum is turning more positive. We're still below zero with the PPO for the NASDAQ 100, but we are crossed above the moving average and going higher. The NASDAQ 100 is still above the 61.8% retracement level. We're getting a little far away from that. Now, if we turn and start to come back down, this will be significant. But until then, we're pretty much in no man's land. And the NASDAQ is still having trouble breaking above this R1 level, even though it did reclaim its 50-day moving average last week. And the NASDAQ is coming back above the 50% retracement level. Now, if it continues to go up, it might hit this 61.8% retracement level. And the small caps, they were really up in Friday's session. Well, they were down over 1%. They're stalling out at their 50-day moving average. And looking at the Russell 2000 small caps, turning down but still above 50 with the RSI. We're coming back up to the 50-period moving average, and that's acting as resistance and coming down as well as on this index as well. But we're still positive on a momentum basis. We're still positive with the Elders Impulse system for the small caps. The mid caps also having trouble getting back above their 50-day moving average and having trouble getting through this pivot point. But the mid caps are still positive for the Elders Impulse system. The FANG index, this is holding up a little better, but these are the bigger monster companies here. We're still above the 50-day moving average for the FANG index. And I drew a line here, and you could probably draw that same line for the NASDAQ 100, where it looks like we're connecting some highs right here. So we want to see this break through for this to turn more positive. The arithmetic scale weekly chart, we're still above this longer-term trend line going back to 2009. Looking at our growth to value, where we did see the Qs outperform the S&P, that's still hanging in there. We turned down just a little bit, and we're just about on the moving average with discretionary to the S&P. Large cap growth is slightly outperforming large cap value. So the large caps are showing some improvement. We're turning back up. It's still below the moving average with the mid caps. We turned up, but we're still below the moving average with the small caps. And this is showing a little bit of improvement. Our longer term highs minus lows study, this is ticking back up, but we're still below zero because we spent a number of days now with the black line above zero. Eventually that will turn the red line back up. If it stays above this zero line, that will bring the red line back above zero and make the previous chart look more positive. This is the new signal. We don't see very many of these. And last March, this is the Zwag NYSE breadth thrust, where we got a really low reading, and then not too long after that, it shot up into a really positive reading. And based on the research by Marty Zwag, this was one of the first investment books that I ever read decades ago. He's since passed away. But this is a positive sign in and of itself. But now we're seeing another one of these being generated. This is a very rare signal, and to have two of them within the same year is even more rare. And this is longer term positive. Then when we look at the stocks above their 50-period moving average, we're coming back down a little bit. We're still just barely above 50% here. And then we look at the mid caps, we're still seeing some weakness. We were showing some improvement, but we fell back in Monday's session. The small caps also fell back a bit in Monday's session. When we take a broad measure of the highs minus the lows with a 5-period moving average, we're still below zero, but we're showing some improvement there. The dollar was up in Monday's session, and we're still in a longer-term uptrend. The financial sector is still above both its 50 and 200-day moving average. If it can stay above this and even show some gains here, we might actually see a golden cross triggered. If we fall back down, that's going to pretty much confirm the death cross that we saw a little over a week ago. Looking at bonds based on the yield, where we were up with the 10-year yield, we were down based on price. We're still above 50 with the RSI based on price, still working off of a death cross. Momentum in the short term continues to be positive. And then this is a weekly chart where we take the 10-year yield in the US and subtract the German 10-year yield. It's coming down slightly. The dollar had some weakness last week, so the correlation is still quite strong. Now, we do have this. I received this over the weekend. This is Tom Bowley's research, where the utilities are not very good in November, where the industrials are good in November. The 1st through the 6th, which we're kind of getting beyond that now, we're up 66.8% of the time. Now we're coming into, based on his research, a period of some weakness until we get more positive in the middle of the month, then a little bit weaker, and then we tend to finish the month quite strong. Airlines and transportation tend to be good industry groups that perform well in November. So what's our outlook for Tuesday? It's still in the middle of earnings season. We're still dealing with what's going on in Israel. The technicals are positive, and we're still in that overbought condition. We really haven't worked that off yet. We will get the trade balance, consumer credit, and then the geopolitical events. Mainly it's about Israel right now. Here's the economic calendar showing that we're really not going to get any major things throughout this week. So we'll just have to see what the market ends up doing with that. And then looking, and I finally changed this. Yes, this is November at the top. It only took 2 or 3 videos of mistakes before I changed that. Where for November 7th, we're positive with the Dow, we're neutral to positive with the S&P, and we're positive with the NASDAQ. We will be on the 5th trading day of the month, where during a pre-election year, we actually see things not as positive. When you look at the solid green line, which is buried in here on top of the gray line, it tends to be more positive. So we're wondering if we're working our way through November. It tends to be positive during a pre-election year when the current president is running for re-election. And we look at this where maybe we're seeing the potential of a little pullback, but longer term, this tends to be positive. Also, when we look at the NASDAQ, maybe we're coming into that. Oops, I have to go over here to the right area. We're coming into this period right after the beginning of the month where we see a bit of a pullback. That's just historically what has happened. It may play out completely different this time. And then looking at the S&P, also tend to see some strength and then a little bit of a pullback later with the S&P 500. Looking at Bitcoin, where this green line, which a lot of people were really using to justify Bitcoin going higher, that's now kind of going down and working its way off, where some of the other areas that were flat, they show some more positivity here. And so we're up into the 36 range, even though we dropped back down into the just under 35 with the Bitcoin index. But we did see a recent golden cross here. So it had been a death cross, and it's turning more positive with the trend. So our scenarios, we can't really go with the down one. We're just looking too positive right now. So we're going more with the up trend right now. That's pretty much what our charts are confirming. We're not going with the sideways trend because even though the ADX is weakening, it's still above 20. That counts as a trending environment. The warning signs, growth is still underperforming. Even though it ticked up a little bit on Monday, we need to see some real follow through with this. The long-term daily special K chart is negative, and the weekly chart is also negative. And the equity put call ratio, the longer term one, it's still going up. And now I had to put this back on this list. The 5 period is now going back up. That's negative. The risk on posture is still showing weakness. The vortex is negative. The longer term new high, new low study is also negative. The Russell, the small caps, and the mid caps are still working off of death crosses. The financial sector is working off of a death cross, but we're still above that 200-day simple moving average. If we can stay above that, that might turn things back more positive. Positive side, we have yet another ZWAG NYSE breadth thrust that was generated. That's longer term. So I'm probably only going to mention that for a few days and then put it in my long-term positive pile of things. The oscillators are still positive, both for the S&P and the NASDAQ 100. The parabolic SAR is positive. The BPI is above 30 and moving up. That's positive. Small and mid-cap growth, it's chopping sideways, but it's still positive with the trend that we follow there. Our conclusion, we're positive, but we're becoming more overbought. If we see any kind of an update, it's going to kick us more into an overbought condition. That's the negative side. On the positive side, you could say, well, there's some momentum there. Now, if we have a down day, it could work off some of this overbought condition. In the short term, we're dealing with resistance as well. We're underneath that longer term trend line. Intermediate term, we're turning more positive and just a few overbought indications that really didn't get worked off in Monday's session. And we're still positive longer term because we're above the 200-day simple moving average. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.